expert in the rating and who is looking after the ratings also. So we'll ask some question from him. So the major aspect is when the COVID was there, you say the economy of our doldrum. Even world economy was in somewhat a scatter. Where the credit rating agencies are playing very important role for that. Even small borrowers, we are talking about the SME sector also, where their position was very, very difficult. Because the rating, if you want to take the rating of these companies, they cannot fulfill the bank investment grade. That is a major issue there, which we are going to discuss. And when we are talking about the credit rating agencies, which is the main, you can say, bridge between the investor and between the borrowers. Because the investors can get a benefit from the credit rating, what rating they are giving, on the basis of they can decide the loan amount even for the rate of interest. If a AAA rated companies, then the rate of interest will be less. If they are having a double B rating or triple B rating, the rate of interest will be higher. That is the point which you are talking about. Then they identify the risk also. Rating agencies identify the risk on the basis of the past performance, current performance, and their repayment capacity, and how they fare in the last 2 or 3 years. Accordingly, they assess the requirement of that. Rating is based on the instruments, not of the company. If they want to have a borrow the debt, they want that is a bond market, other thing, they are playing very important role. Now we are talking about the securitization of the debts. That is also rated. All security documents are being rated. So this is also main issue because once the bank is having a loan, they can get the securitization of their portfolio for their assets by creating some other SVB. SVB, if the rate of interest, if they will going to the market floating a bond, that means up to that extent, bank can recircle the loan which they are given to. Otherwise, there is optimum level will be there. That is also there. So I'm talking to you detail, and we have a proper agenda for that. So we are going to discuss the key factor to consider the improved credit worthiness of the party. What are the factors which Mr. Suman Chaudhary will talk to you? Role of the credit in better access to the finance, because this is also important how the rating agency assess the loans, assess the rating. This is also most important issue. And we are also talking about the implications of the credit analysis on relative with the lender and supplier. Lastly, fourth point, which we are going to talk is how alternative credit lending model can boost credit supply to SME sector, which we are having Mr. Ajay Vyas, who was executive director of the UCO Bank. I think he is the best person to talk about the alternative credit lending kya hai. How the because we are depending on the traditional lending, whether alternative lending is also possible. What are the factors where they can get the loan for that? So these are the aspects we are going to talk in a details. Now I am coming to Shri Suman Chaudhary, is Executive Director and Chief Analytical Officer, Acute Rating and Research Limited. With the aggregate experience of 26 years in the credit rating, research and risk, Suman led rating execution, analytic quality, and thought leadership of the acute rating and research, and also director in its board. He has had a leadership role in Crystal before joining Acute. He also worked in the banking sector as a group head in credit risk management and group ICICI Bank. So Mr. Chaudhary is MBA from the Indian Institute of Management, Calcutta, and graduate of mechanical engineering from the Indian Institute of Technology, IIT, Kharagpur. I think he is both way, as a technical, as a financial expert for that. So Mr. Chaudhary, just I am asking you first question, what is the role of the credit rating agencies? to in better assess how to finance. What we should role? So assessment of the finance, can it be made by the rating agencies? So I hand over to Mr. Chaudhary. Chaudhary sir.
Thank you. Thank you for setting the right context, Mr. Gupta, and also for giving a very liberal, nice introduction. So let me just, to just explain things a little better. What I will do, I will just share my screen and you can see some slides and I will try to complete this quickly. Thank you. Let me just share my screen now. Just give me a minute. Is my screen visible?
Yes, sir, visual.
Okay. So let me, I think you mentioned about Acuité Rating and Research Limited. So let me just talk about ourselves a little bit so that people can get the proper perspective. We are one of the regulated and licensed rating agencies in the country out of the 7 rating agencies that are there. We have started in 2005 as an SME rating agency. In 2012, we were also licensed by RBI. So around 10 years, we have been doing bank loan ratings and bond ratings. We have done ratings of over 9,000 now, 9,300 entities to be precise. We have now a subsidiary which does SME ratings. It is called Smera Ratings. So if somebody is looking for a SME rating, which is a different scale, then we have our subsidiary to undertake it. We are also one of the first rating agencies, actually the first rating agencies to set up a ESG assessment company. Some of you must have heard about it. It is called esgrisk.ai. We have already published around 1,000 reports on the top listed companies of India on their ESG performance. So this is what we do. And our shareholders, I think some of you may know, but just quickly, Sidbee and Dun & Bradstreet, which is a multinational credit information company, they are our primary promoters, but we also have a lot of banks which are our shareholders, which includes public sector banks as well as private sector banks. I mentioned that our primary activity is credit ratings. We have a very qualified analytical team who does these ratings. We also do research on the industry. If you go to our website, you will get many reports on our economic research. So it's a very strong analytical company and we are trying to improve year by year. Now, let me come to the basic questions and let me just explain about what is a credit rating, because it is possible that some in the audience may need a little bit of introduction to it. Now, the way credit rating, beyond whatever definition is there, that rating is actually an opinion. It's an expert opinion on the ability. These words are very important. Ability and willingness of a borrower to meet his interest and principal payments on the rated debt in a timely manner. Now, every company or most companies will have some borrowings, what we call debt. It may be in the form of bonds, debentures, it may be deposits, it may be bank loans, whatever it is, you have to pay interest and principal on it, right? So will you be able to pay the interest and principal on that in a timely manner? That is what this opinion is going to provide. And this opinion, as you will see, is in a scale. It starts, I will show you, AAA, and it goes down. So AAA is the best rating that you can get, and D means you have already defaulted on the rated debt. So what does this rating measure? This rating measures the probability of default on the instrument. So if you are rated AAA, which means the probability of default should be the minimum that is possible. It should be negligible. And the probability of default, obviously at D means it is already defaulted or going to default, it's almost 100%, correct? And as Mr. Gupta initially said, rating that you assign is on the instrument. It is on that NCD or on the bank loan. It is not on the issuer. There are other, counterparty ratings or issuer rating as it is called, but mostly you get rating on the instrument. And as I will show you the scale here. This is what I was referring to. I think most of you would know this. It starts with AAA category. There are pluses and minuses, not in AAA. AA plus, AA minus, like that, A plus, A minus. BBB also has that. And at BBB, up to BBB category, it is called investment grade, as Mr. Gupta ji was also alluding to it. And lower down, BB category, B category, C and D, these are non-investment grade categories. Means, as you can see from the definition, this has higher risk. It's already at BB, it is saying moderate risk. At equity B or B category, it says high risk. Means the risk of a default is higher. So this is the long-term scale, and accordingly, there is also a short-term scale. So there are some bank facilities or even commercial paper, some short-term instruments which have to be repaid within a short period of time. There you use a short-term scale, and that is A1, A2, A3, A4 as at default. So these scales are also very similar. It is mapped to the long-term scale, but what is more important is the long-term scale, and the short-term scale is derived from that. Let me come to the primary question, which is what is the role of credit rating and credit rating agencies? Now, the first thing why credit rating is important, and globally, as you know, that credit rating didn't start just a few years back. Yes, in India itself, it started in 1988, 87, 88 when CRISIL was set up. But globally, this business has been there from the 1850s. So it is more than 150 years of existence in the world. So ratings was always thought that it is an independent opinion from an expert who can analyze credit, who looks at the data and provides an unbiased and independent opinion. And therefore, bankers and investors, they have traditionally, they have relied on external ratings to assess their portfolio risk. How much is the risk? Let me look at, is it likely to default or not? Basically from the probability of default perspective. And internationally, definitely, but even in India, if you see today, if you go to the NCD and bond market, all the listed NCDs, bonds, they are all rated, sometimes even by 2 rating agencies or 3 rating agencies. So this is kind of you can say, though it is public issuances are meant to be mandatorily rated, listed ratings are required because on listed bonds, because the investors are asking for it. So it's a kind of a market requirement now. On the bank loan side, interestingly, Basel II guidelines came in 2007. At that time, RBI said that banks have to start using external ratings for their risk weight allocation. Means loans, as you know, banks need capital or they have capital requirements. Capital requirement will be assessed based on risk weightage. And how will this risk weightage of each of their exposure? And how will this risk weightage be determined? It will be determined by external ratings. So I don't want to get into the details. If, let us say, the rating is best, AAA, then the risk weightage of an exposure is only 20%. If it is BBB, then the risk weightage is 100%. If it is BB or it is unrated, it becomes 150%. So obviously with higher risk, the capital requirement increases in banks. That is why it is so important for banks to have ratings, especially for good companies, because it will help them to reduce their capital requirements. Now, how do ratings improve access to finance? The first thing I will say is that when a company is rated and rated regularly, you have a live rating at all points in times. It means that the company has better transparency. It is sharing information Not only that its performance may be good, but more than the performance, what is important is the transparency, the disclosures that the company is willing to make to a rating agency. That gives a lot of comfort, I believe, to banks, investors. And good ratings, what it does, and Mr. Gupta also said that good ratings, investment grade ratings particularly, clearly there are examples, it will improve the pricing of debt. If it is a loan, banks will give a better rate. If it is an NCD, definitely will get a better pricing. And other very important thing, the collateral requirement becomes less. You have lesser security requirements. So if the quality of rating, if it's a good quality company, the rating is good, it has enormous advantages in funding. This is how I think Mr. Gupta wanted me to also quickly run through this. How do rating agencies assess companies? Look, basically risk assessment, credit assessment, when you are doing, you are fundamentally what you, just to simplify, what are you looking at? You are looking at the business, you are looking at the financials, the balance sheet, and importantly, you are also looking at the management risk. Now, just to give you a little bit of flavor on all of this, what is business risk? Business risk means you have to look at the business model. Which industry, what is the market position, is it competitive in its products and services, is it operationally efficient? Broadly, these are the things that you see. There are a lot of questions and analysis that a rating agency will do. But ultimately, when you are looking at analyzing the business, you will look at industry, you will look at the market, you will look at its market share, you will look at the operational efficiency. On financials, what will one say or do? They will look at the financial of the company, past financials, analysis of the financials, their ratios, how they have done in the past. More importantly, because ratings, there's one thing I forgot to say, is a forward-looking statement also, opinion. It is, ratings is not meant to be a report card of what you have done in the past, although that is a factor. What it is more is, it is a expectation of what you will do in the future. So it is possible a company may have incurred losses in the past, but let's say the rating analyst and the rating committee, the rating agency believes its performance is going to be significantly improved in the next few years. Then actually the rating may be better despite the losses in the past. So this is very important, and that is why future financial projections forecast becomes very critical. Financial flexibility. Now, this is a very important aspect that we look into, which basically means that what is the ability to raise funds in case of an exigency. Can they raise funds from promoters? Can they go to a bank and raise money? Can they sell assets and raise money? So this becomes an important factor in assessing financial risk. Thirdly, management risk. Management risk, you look at integrity, three main pillars: integrity, competence, and risk appetite. Integrity is, I think, basically, have you followed all the laws and the regulations? Are you compliant with the laws of the land? Broadly this. Or you, so you know, your tax compliance, your statutory compliance, that becomes an important track record for the management. Competence. Competence means, are you able to execute a strategy? Are you able to complete your projects on time? That is a statement of your competence, your experience, expertise. Third is your risk appetite. Means if an entity, company is very aggressive in the sense, it wants to do many projects, many businesses at the same point, and it raises a lot of debt, then we say that the risk appetite is very high. An aggressive approach that is considered to be more risky inherently. Okay, so this is kind of just to give you a flavor, and I have already explained, so I will not get into these explanations. If anybody has any questions, I can address this. Other thing is project risk management. So sometimes, you know, we come across a project company. So somebody can say that, okay, I have small business, but I'm doing a big project. Then I will have to assess the project. How do I assess a project? I will have to say, has he tied up the financing or not? Is there funding risk? Will he get the funding? Will he be able to raise loan from the banks? Then if he is able to raise the money, is there an implementation risk? Will there be cost overruns, time overruns? Is there okay, after he has implemented the project, is the technology tested? Is it something that will deliver whatever production they wanted to do and in whatever quality they want? Will they be able to satisfy the customer? Therefore, technology risk is something that is also needs to be seen wherever it is applicable. And finally, demand risk. You can make the product or you can make a deliver a service ready, primarily products. This is more applicable for manufacturing. You deliver a product, but if it is not, there is no demand for that product for whatever reasons, maybe there is cheaper imports, maybe there is no market adequate for that product, then there is a demand risk. So all these risks have to be evaluated for a project risk assessment, which will be there whenever a company is undertaking a big project. So this, I have completed the risk kind of explanation a little bit. Now, I think the lastly where I will go to is key factors that can strengthen the credit quality. What is it that, these are some of the thoughts that I wanted to share with the audience. What really helps to kind of improve on the credit. Now, one, as I said, one very important factor for ratings, important to the analyst, is the quality and the reliability of the data. Whatever you provide, and say next year, you give some projection that you will achieve 300 crores of revenue. Ultimately, when the actual audited numbers come, we see that they have achieved, I'm just giving an example, only 200 crores. Yes, there's maybe factors behind lower performance, but if there is that, and there needs to be that, I think, that reliability of that information, which is considered, which is important for building trust, for taking that opinion. Information also should be available on a timely basis. We face this challenge. I'm sure many of you will know, in the rating industry, many companies don't provide information on a timely basis. So let us say they may be doing some acquisition, but a rating agency don't get to know about it. They may be raising term loans for a big project, but rating agency is not informed in time. This sometimes do impact the overall view on the company. And naturally, if, as I mentioned, if some group or company is very aggressive in raising debt, and especially high cost debt, that is not a very positive aspect. What is important is, let us say, what kind of also backup plans you have. Your regular cash flows from business will be there. But what a rating agency also sees is, okay, in case of a stress, let's say a worst case scenario, there is a stress, like what Mr. Gupta mentioned. We know what happened in the pandemic, complete lockdown, no operations. How will you service debt? If you don't get a restructuring window, how will you service debt? Do you have a backup plan? Do you have cash? Do you have available liquidity in the balance sheet? Do you have undrawn lines, sanctions from the bank? So liquidity assessment is a very important part of how a rating agency assesses the overall credit. And support from the promoter is something that we factor into a large extent. We have seen that in the past. We see that in many companies and groups where promoter companies infuse funds. They don't only depend from the bank when the bank will give sanctioned disbursement. They give unsecured loans, may not be equity, maybe unsecured loans which come. And that is considered as a very positive way of supporting entity. Finally, the part which is important in our mind for an overall health of a company and overall rating is healthy working capital management. How are you managing your working capital? When you say working capital, your debtors, is it in control, or do you have debtors for more than 6 months? Means your cash is trapped in debtors, or your inventory is high, or is it higher than what the industry parameters are? Every industry can have different working capital parameters. So we compare, we benchmark with other companies in the industry. So all these parameters have to be benchmarked. And the important part here is, as bankers also look at, is are you deploying short-term funds for long-term use? This is not something that one is expected to do, because it will lead to your ratios will go haywire. Current ratio will be something that bankers will not be comfortable with. So when you take short-term funds, let's say working capital, you should use it for working capital. If you need long-term funds for projects, you should take long-term debt. This is what is very important in the way I see it. So these are just few, a little flavor that I can go on and on, but I think there are other esteemed speakers and we would also like to hear their opinion. So thank you, Gupta ji.
Gupta sir, you are on mute, please.
Yes, Gupta ji.
Hello.
Yes,
Thank
sir.
you, Mr. Chaudhary. I think मेरा disconnect हो गया था. I'm extremely sorry for it. I could not
No
listen to you.
problem.
लेकिन major aspect I think you covered very nicely. What are the better assets to the finance? Major issue is how to improve the rating. I think this is a major aspect in this rating. What are the factors you consider that so the rating of the person can be improved, of the instrument can be improved? Have any views in that respect?
See, actually, as I said, improvement of ratings is a very difficult question, because I have touched upon it in my last slide that it all depends on the particular business. And so how you run the business, how operationally are you efficient? What is most important is the quality of the data. What data are you sharing, and what confidence is there? So let us say you give some data, and next year the data comes out. When we see the audited, you give some provisional numbers. Let's say we have examples of companies giving provisional numbers. And then when the actual audited numbers comes in, there is a difference, right? So these are very important governance issues. So I think to really if a company is aspiring to get a better rating, then they should try to improve on their governance. It is not just about performance, but it is about you being open, being transparent about what is happening, giving both the good news and the bad news to the rating agency in the right time. I think these are very important. And as I said, some aspects like conservativeness on debt, not taking too much of debt, not using short-term debt for long-term use.
Thank you, Mr. Chaudhary. Actually, I am sorry for that, because a few minutes I could not catch your viewpoint for that.
Yeah.
So I cannot react on that. I think you are covered very nicely for rating. I will come back to you if need be. So I'm just coming to Shri Ajay Vyas. He is a former executive director, UCO Bank, digital banking strategy inventor. So Mr. Vyas, having a problem solving and analytic skill, creativity and innovations, decisiveness, growth mindset, collaboration,
I can't hear you.
Ravi, we can't hear you.
Yes. Vyasji, can you hear Mr. Gupta?
No. I can't hear him.
Okay.
Probably he's disconnected.
Yes. I think he's facing some audio problems.
Okay. Chaudhary, probably Gupta ji was interested to know about the alternate lending models. He was talking about this.
Oh,
This is, I think, and he was having a view that I should deliberate on the alternate lending models for MSME sectors. See.
okay. I think
See,
yes.
so let's not. So what I'll start deliberating on these issues.
Yes, maybe
You
you
see,
can
Vyas,
start.
sir, you are getting me. Vyas,
Yeah. Sir, we have already.
you are getting me.
We have already started, sir, on alternate lending
Thank you,
models.
sir. Thank you very much. Thank you very much, sir.
You wanted me to deliberate on alternate lending models in India, huh?
How
So-
you can boost the supply of
Yeah,
the
absolutely. See, basically what is happening, the traditional lending model does not fill the appetite for the MS sector. Almost there are more than 8 crore business enterprises sectors in India, which is providing employment to almost 11 crore people in India. This sector contributes approximately 90% of the manufacturing output in the economy, along with significant share in revenue generation for service sectors. However, despite the contribution to the economy, the sector has remained largely underserved by the banking sector and by the financial sectors. The existing gap in the availability of funds to SME and other government on increasing credit flow to this agreement has put digital SME lending in the sweet spot right now. And probably most of the fintech companies are working for an alternative mode of lending to SME sectors. What are the limitations to the conventional credit underwriting models now? What exactly, why alternate model is required? The funding challenges for SMEs stems from banks and financial institutions have found it a task to assess the credit worthiness, choosing only to fund enterprises that have a good CIBIL score, detailed audited balance sheets, financial statements, and have an asset as a collateral. These are the basic fundamental, the tools which the banks and financial institutions are following to lend to the SME sectors. But what we have seen is number of companies do not meet this criteria, or even if they meet the criteria is very low. As such, the banking sectors are not able to fund these institutes, these SME sectors and the demands, and the appetite remain unattended. In past, few microfinance companies, NBFC have stepped in to fill up this gap by some innovative lending procedures. But still, what I personally feel, they to some extent they were able to give the credit flows to the SME sectors, but not what is required for these sectors. So the fintech companies, they started working on these models, and the alternate credit scoring based on digital data gives the lender a more holistic view of borrower's creditworthiness and associated risk for credit underwriting. Fintech lenders are using different non-traditional data sources to determine a borrower creditworthiness and repayment ability, along with a mix of conventional data points on the enterprise financial performance, such as sales, revenue, income tax return, GST data, book of accounts, latest cash flow statements, and outstanding invoices. So these are the data which normally the bankers did not have any access, or had access, but to a limited extent. And even then, they did not have the proper business tool, analytical tool to process the data points which I have just spoken to create a intelligent decision making tool. So now the fintech companies have come in. Now they are now new such transaction data, point of sale information, surrogate data like utility bill payments given a granular view of the business. This model has largely been pioneered by fintech companies. These companies provide digital sourcing platform, run the alternate data scoring engines, partner with various banks and NBFCs to offer various lending products. So most of the banks now are now going for alternate lending systems because the traditional system does not support their credit underwriting engine. So deployment credit underwriting mechanism powered by advanced technologies such as artificial intelligence, machine learning, and data analytics, a massive volume of data from various disparate sources can be compiled and analyzed extensively with the help of algorithm to derive this useful insight. Each data point can be treated as a variable of credit appraisal and can be assigned a specific weightage depending on the nature of business within the overall MSME segment. The resulting credit score are then used by the lenders to take decisions pertaining to the financing of loans, such as assigning interest rates, quantum of loan, deciding on repayment terms and timelines. Data analytics, machine learning, and automation provides a strong foundation for new age credit underwriting models employed by fintech lenders, ensuring faster, much better access to credit for MSME located even in the tier 3 and tier 4 cities, town in India. The tech-driven financial service, the marketplaces are facilitating access not just to lending, but also the whole different range of financial management and investment services for MSME and connecting them to the capital market as well as institutional investors who want to contribute their growth. The marketplace, now the consumers, the borrowers can online apply for their loan and all the data are compiled online and the decision making modeling helping the bankers, the lender, the financial institution, the NBFCs to take a decisions. So these methods, I can talk with one of the latest model which I have seen right now. It is with the one company is running with the in collaboration with IndusInd Bank, wherein what they are doing, they have derived algorithm wherein the borrower is supposed to work in that algorithm, that that app, and immediately the bank gives them 50 lakhs of loans, minimum 50 lakhs of loans immediately given. What happens in this whole modeling? The whole in the payments and the receipts of the company are routed through this app only. He can't route the app. The buying and the selling are done through this app, and the bank knows exactly what is the health of the company. So this is how the things are happening, and immediately things are the loans are being disbursed. So alternate decision model, I think in coming days is going to be a big changer in the financing to MSME sectors. Thank you, Gupta ji.
Thank you very much, sir. I think you have covered very nicely what the alternative funding by the bankers are providing, even for the capital market, what we are talking about, the IPO or something like that.
Yeah.
So they are also coming in a big way.
Yeah.
So for SME sector, I think it will be playing a long-term game also.
Yeah.
Sir, these are the rating agencies are being governed by the SEBI.
Yeah.
Just like banks are governed by the RBI and they are SEBI. What do you feel that? So SEBI control is sufficient on the rating agencies because certain companies gone bad in spite of the fact that the AAA rated companies are there. Have any view on that, sir?
Gupta ji, ऐसा है कि the SEBI is the controller regulator for these rating agencies.
Sir.
ठीक है. From time to time, several steps for strengthening the process of credit rating has been done by SEBI. SEBI directives require the credit agencies to be transparent, disclose to the public the information which may have material bearing on the rating, any source of conflict of interest with the undertaking the rating exercise, rating methodologies, rationale for the rating, etc. So what, as a regulator, SEBI is taking all precautions measures. Recently, they have brought a term called provisional also right now. So in case of instrument where rating is required to be done, and till such time the disbursement or the has not happened, they have to use word provision. But they certainly you cannot, because these rating agencies, they are opining the things. They are not the decision-making authorities. Based on the opinion of the rating agency, the financial institutions are taking the decisions. So the onus of any failure cannot be put on the rating agency. That is what I personally feel.
Very nice.
And then and another very important thing, Mr. Chaudhary very rightly said how honestly and how transparently the data has been shared with the rating agency also carries a lot of weight. If there is some manipulation in supplying the data to the rating agency, or some data has been concealed or hidden by the company, then probably rating agency will not be able to exactly pinpoint the thing, because they are not the auditors. They are not auditors of the company. The data which is supplied by the company through the audited firms, probably that data only they process. So we cannot put blame on the rating agencies if AAA rated company has gone bad. So rating agency giving the rating based on the market reports, management rates, whatever Mr. Chaudhary has told, and the data supplied transparently by the company. So I don't think we can pinpoint the rating agencies for this default. But however, the financial institutions which are taking a call need to be more vigilant. They should not completely depend on only rating agencies. I'm telling you, rating agency is one of the decision-making tool available with the bankers or with the financial institution. More than this rating agency, there are multiple other tools which the bankers normally see before lending to a firm or to an organization.
Very nicely, sir, you covered. So, Mr. Suman Chaudhary, have you any view for that also, sir? What Mr. Ajay Vyas is telling, you agree with that, or you have some different opinion?
No, I really appreciate what Mr. Vyas said. I think he is, I think, given a very important viewpoint. But I will try to balance that. I will say that rating agencies also have a role. We have to understand that a lot of, as I mentioned in what I said, that a lot of investors, retail investors, even depositors, bankers, so they all depend on ratings, right? The investment is made based on the ratings. So rating agencies cannot shirk away that responsibility. That is what I am in a rating industry for.
Very nicely, sir.
I will say that we cannot shirk away the responsibility.
Sir.
We should do our job to the best of our ability. We should follow all the regulations, all the process.
Sir.
But honest mistakes can still happen.
Sir.
As Ajayji rightly mentioned, that we are dependent on companies to provide us with reliable information. We cannot, even auditors today, you know, that they said that their audit is based on management representation. Even auditors are not confirming. What will a rating agency confirm on the quality of accounts? So we are dependent on the governance of that company, and we base our opinion on that. And we try to do an honest job, but mistakes can still happen, because at the end of the day, there may be models, but it is a human committee decision, rating committee decision. So there may be errors, but as long as this is made in all sincerity, I think rating agency has done their job.
Thank you. Thank you very much, Mr. Chaudhary. Now I'm coming to Dr. Rajat Kala. He's a founder and CEO of RR Financial Advisors. He has so much a long qualification with him. So he PhD, MPhil, MBA, EMBA, MCom, BBA. So if I go on reading, it will take its own time. He's so intelligent person. Mr. Rajat comes with a rich experience of 15 years in the banking sector, worked for a plethora of verticals like branch management, liability, assets, rural banking, SME, banking administration, business administration, sale portfolio management, investment banker, and so many qualifications he is having. Mr. Dr. Kala, sir, that's I want from you. So you are expert in the SME sector. SME always face challenges in access of the finance. What role a credit rating agency can play in addressing the gap of SME financing? Have any view on that, Mr. Kala?
Yes, sir. I am having my own view on this.
Please,
And
please,
first of all,
please.
sir,
Sir.
thank you, Gupta sir, for giving me the opportunity to be a speaker on this part. And thank you all for being on this forum. First of all, we came to know what is the MSME sector is always like facing a challenge to access the finance. Yeah, it's true
Sir.
because micro, small, and medium enterprises, as we all know, these are play a vital role in the country's economic development, especially in India, as it's working on an everlasting growth. Only this specific sector has a huge contribution towards the country's growth, innovation, and employment generation. But but MSMEs are still unable to integrate seamlessly with the finance sector. With the arrival of modern age technologies and its adoption, the financial sector and institutions have multiple credit services to offer, especially to MSME. Unfortunately, it's the lack of understanding that it creates a hindrance for MSME to grow and make a stable market presence. And now I am talking about some issues that limits the MSME in gaining access to the finance. We all know that MSME are having some industries like the business operation have frictions. The strict government protocols makes MSME struggles for approval to begin their business journey. There are multiple loopholes that restrict small size companies from growing well in the market. Factors like construction permits and MSME loans create a confusion state for the entrepreneurs. Business have to wait and clear up multiple legal procedures before actually starting their core operations. Second, they are having inadequate financial expertise. To keep the business expansion from collapsing, the right financial strategy become very crucial. However, a lot of entrepreneurs having inadequate financial expertise, sorry to say, lack of information disables them from steering their business in the right direction. Running a business, especially a startup, sir, it's require a very strong knowledge about the financial market. Otherwise, business can end up making wrong decisions and add an unnecessary cost to the company. A startup also have relied on MSME loans to keep away from the entire economic shift caused by the pandemic. Third is, sir, no access to the financial solutions. These regulatory loopholes cause the problem for MSME because these hindrance of the financial access through the government have already implemented measures to make the credit access for the startup available. Due to lack of funding, businesses, they end up in the loopholes of the problem, which relates to the manufacturing, getting access to raw material, and acquiring new technologies. In addition to financial crisis, liquidity crunches are also trouble the MSME in getting the simpler credit access. The another which I am seeing a problem in the MSME is that there are a huge gap in technology access. Lack of awareness cause business to struggle in reaping the benefit of technological advances. Hence, keeping a track of favorable technologies should be an integral part of any startup beginning stage. The government is making consistent effort to streamline and provide a solution to MSME technology related problem. Sir, in India, almost 93% of MSME, they don't access any outside funding. 5% use only institutional finance and 2% use non-institutional finance. Means they took a loan from their family, relative, own finance, or from sahukar. What else? You know me better, sir. The main problem faced by MSME in accessing the institutional finance is lack of collateral. The collateral security is the main issue, which makes it hard them to offer any other security for the bank loan. Because when and regarding collateral, bank doesn't provide any loan more than 10 lakhs in against the security. Also, they do not have credit histories either. For the startup, there is a main issue that they are not having credit history. These makes the lending to them risky proportionate for the bank. Hence, bank, sometimes the banks, they distract their hands to giving a loan to such MSMEs. And a very detailed loan appraisal of the MSME, they could reduce the risk of lending, but it will create a huge transaction cost to that MSME, sir. And if I talk about the role of credit agencies, which they can address in the MSME situation, like in developed countries, credit scoring models, they have been reduced to time and cost of the lending to small business. It's a well-known factor. But such models need to specify develop in Indian construct using historical data on the lending to MSME. In the absence of collateral, credit history, past data could be used to obtain credit insight that could help evaluate the loan requests made by the MSME. Such model could be a good way to ensure the speedy appraisal of loan requests from MSME at a reasonable cost. A major hurdle of MSME financing is the information. Information means many of the units do not complete accounting records, audited financial statement, or the well-articulated business plans. This makes credit assessment by potential lenders very difficult. Lenders may need to help the enterprises put together these documents, which may again increase transaction cost, especially relative to the small tickets of the nature. Even when accounting record and financial statements are available, sometimes MSME has to trouble accessing institutional finance. This is because the volatility and the risk level are considered to be the highest in the MSME sector among large corporate. As often, MSME are dependent on a very few partners and the contract. For instance, in some years back, we have seen example of Maruti Suzuki, wherein most of the partners of the Maruti Suzuki got NPA due to some financial crisis. And these MSME therefore were classified as the NPL from various banks, although they paid later, but that was the history.
Very nice, sir. Very nice, Mr. Kala. But the major issue is how the rating agency, what you're talking about, 5% or 7% lending is available to the sector.
Yes, sir.
Microfinance is far away from that. That's why government has come out for a co-lending or something like that. Like a major factor, what we are talking about, how the rating agency can be bridge the gap. Whether they have any thought in that respect, sir?
Sir, the credit agency, the credit agency can help in the performance and the credit rating scheme by launching of the credit rating schemes. These credit rating agency can help the MSME to bridge the gap between the finance, between the MSME and the banking sector.
Okay. Malad, what you feeling is that rating agency can play an important role to bridge the gap.
Yes,
So
sir, definitely.
how it is possible? Have any thought in that respect?
Sir, see, because in India, the loan which were given to the big corporates, the structure, the parameters which bank follow to give a loan to big corporate, the same expectation was keep away from the MSME sector. It is very true in nature, sir. It is very true in nature, sir.
Very, very right. Very right.
And
Very
sir,
nice.
see, if we want to increase our MSME sector, we need to shift
Sir.
our paradigm. We need to shift our some policies in giving a loan to these MSME sectors. Because
Yes.
you can't keep Anil Ambani or you can't keep Red Kala on the same scale, sir.
Very nice. Very nice.
So
Very nice. Actually, I want to come to that point only because that parameter, what we are deciding for the big corporates cannot be implemented for a small borrower. I think for that, Mr. Suman Chaudhary can give something for that. Mr. Suman Chaudhary, have any view on that?
Yes. Yeah, I thought I will add to what Mr. Kala said. Yes, this is a challenge because when you use the same scale in bank loan ratings, for example, for SMEs and large corporates, there is obvious disadvantages because of the scale of operations primarily. So what is, as I mentioned earlier, we have a subsidiary and you must have heard about SME ratings. SME rating is a different scale of ratings. So there is SME, for example, our scale, which we started in way back in 2005. In fact, that was set up as an initiative of Government of India through SIDBI. We said SME 1 is the best, SME 1 to SME 7. So it's a different scale and only for SMEs. So let us say somebody who is, just to give you an example, maybe in the rating scale of AAA to D, it may be BB, non-investment grade. Right. But in the SME scale, it is relatively better. It may be SME 3 also. Correct? So the point is that, therefore, what we advise our SME clients is to do SME ratings, especially when we are looking at small loans. When you look at a moderate amounts, let's say 10 crores, 15 crores, you are going for a project and you want to approach a bank, then you do an SME rating. And I wanted to say that we have a memorandum of understanding with several banks now. Our people in SME, SMERA will be able to give you the details. We have MOUs, they will accept the SME ratings. And that is how access to funds can be improved.
Major point, Mr. Chaudhary, is for the parameter, what you are deciding rating for a corporate, big corporate, by the same parameter are being applied to the SME sector. That is a major issue. Whether you are giving some, you can say, leverage to the SME because they have no financial statement with them. They have no any advisor to these people. And you are taking all such financial statement, audited balance sheet, projected balance sheet, and very difficult to SME sector to
Gupta,
give
sir.
all the information.
Gupta, sir.
Sir.
Sir, one point that if we take example in 2015-16, Mudra loan was interrogated by central government.
Sir.
So they don't ask any financial or the background or the historical data, especially State Bank. They simply give the loan, to the thele lagane wala, chai wala, 50,000 rupees. I'm just giving a small example. See, because it's a small unit right now, also it's a chai wala is a small unit because we consider the business. That chai wala could become a very good MBA chai wala in coming 5 to 10 years if we provide them financing available. Along with, yes, the major hindrance is the education, the financial education is the loophole which I understand during my banking tenure. People are least bothered about their finances. If I come about finances, not their own pocket money, financing means maintaining their balance sheet, maintaining their investment, their loan tenure, and other financial, papers.
Okay.
So if from starting, if people of India are getting the proper knowledge of finance, how to keep their finance paper up to date. So in the coming 5 years or 10 years, we will be in a position that presently we are talking about hindrances of MSME. In the next 10 years, I am sure that if people start taking their financial papers seriously, getting proper knowledge from bank, NBFC, or from the government, there will be no hindrances for any MSME to getting the finance from any of the institutions.
Okay.
I will also add, Gupta ji,
Sir,
a little bit to what you also asked.
Sir.
You are right that we should not expect a lot of better, excellent information systems in SMEs.
Sure.
So when we do SME ratings, then our benchmarks are not that high. That is one thing that we should, because we are comparing with other SMEs only.
Right, sir.
SME rating that we are doing.
Sir.
So what sometimes they will not, we say track record. Now SMEs may not have track record. Maybe it's an entrepreneur who has just set up. He may have some work experience somewhere. So we have to look at the experience of that person who is setting it up, his competence, his experience. So we do this. I think I would say tweaks in our rating criteria for SMEs. It is already there. We have also established models, and I think we believe that we understand SMEs because we have been rating them from 2005. So yes. Having said that, I think micro businesses are very different. I think Mr. Vyas also said, if you are talking about small retail,
that is not applicable. That is not applicable.
That is not applicable.
That is not applicable, sir. For retail business or something like that, their bank will never ask for the rating. That is also a point. My only point here is, Mr. Chaudhary, so if a new venture, if a startup company can get a investment grade, because they have no past experience, only they have project report with him and they are starting the business. And whether you feel that a new venture company, new venture person, he has some BE degree or something like that, his project report is with him, which is considered to be a technical or economical viable, whether they can get this investment grade rating for a new company. That I think this is a major issue because my personal experience says a banker, I was also a banker, and with the research in India last 15 years. So I feel that for a startup to get a rating of investment grade, it is very difficult. Have any view, Mr. Chaudhary?
Yes, definitely. I think I will be honest, it is not easy to get an investment grade rating unless you are part of an existing group where the group or the
A new venture we are initiating, that new person should come, make in India should be there. We should do startup, something like that. We should unicorn should be there. Something we are talking in a big way. Lekin what about the rating for a new venture? Because investment जो investor है sir, वो चाहता है उसकी rating कराना. Investor को rating मिलती नहीं है, तो he not getting a loan. That means startup के लिए सबसे बड़ी problem यही है ना sir. He cannot get a rating. Rating cannot.
He can get a rating, but he can get.
Have any solution, sir, for that, Mr. Chaudhary? You are such an experienced person. Have any view on that?
I would say this, sir, that investment grade rating as per the existing criteria, the scale that rating agencies have.
Sir.
You are right. It is very difficult. Why it is difficult, I explained, because they may be starting a project. There is so many risk factors that a rating agency has to consider.
Right. Sir.
As per the rating framework. Sir. So unless a rating agency is really confident, it is very difficult to assign an investment grade.
That is a concern. I think this is.
Now, what is the solution here? I think
that is a point.
The solution is that bankers. I think the problem is the bankers is asking for an investment grade for a startup.
Yes, sir.
To be very honest, because there are, and actually it is not the case where every bank company, every bank exposure is investment grade. You see, we have rated so many companies which banks finance, they are not investment grade. They are rated B, there are so many. I will give you an example of dealers of, various automobile companies. Now, they are not mostly investment grade. Few of them are, but they are financed by banks. So it is not that banks only finance investment grade companies. So banks should look at it. I think it should be a policy program. Maybe there should be some kind of backup guarantees from the government. Government has already provided in some cases during the pandemic, GCL loans, for example. So I think some backup support should be there for this kind of loans. Insurance can be there for this kind of loans. But I think it's it will not work if only investment grade rating is asked for.
Sir, credit guarantee scheme is available in that scheme, sir. For a smaller, there is no problem at all. 75% is being covered by the credit guarantee scheme. So what is the problem in this? Like a major point is the rating agency should come out something for the startup. That message I want to give. The rating agency should also come out something.
Correct.
So I will come back to you. Now I'm coming to Dr. Khan. Dr. Khan is a lead researcher, livelihoods and financial well-being project under TISS. She holds PhD from the Tata Institute of Social Sciences, Bombay, MBA Finance from the Osman University, BA Honor from the Economics from the Bombay University, UCG. With so many qualifications she has. She had delivered lecture courses in finance, economics, business strategy. She teaches wealth management, investment management, and investment banking courses, among other courses. She's a popular speaker at conferences and seminars on capital market and investment. I think she's right to, we are talking about the capital market. Have anything, madam, you feel that for a IPO, for the SME sector, they can explore the capital market? If because you are expert for that, I'm out of the question I am asking you, because you have addressed so many conferences for the capital market and investment. So you can suggest something to our SME sector, how they can go for the SME and whatever the rating for that is required. That is also a point, because you're coming to IPO, whether rating is required from the rating agencies. That is a more important issue. I hand over to Dr. Khan.
Thank you, sir. It was really nice to listen to all the guests up until now, and like the whole, it's good to see that various aspects of this issue is being probed. So I would like to start by saying that market mein power kiske paas hota hai. So when we teach students also, we teach them market power. So that person who can decide the price, uski haath mein power hota hai. So now you have a set of lenders and you have a set of borrowers. So you have MSMEs and whether it's banks or NBFCs or whoever. Now there is a matching of these two parties. So market mein चार ही चीजें होती हैं. You have buyers, you have sellers, you
Yes.
have an exchange,
Okay.
and you have price. So I
Right.
think we have to understand that good, strong markets are those markets where you have large number of buyers, large number of sellers. You are not tied into any instrument. There is liquidity. You can reverse it. या फिर मतलब जैसे बोलते हैं कि you have to have knowledge, you have to have information. I think वही बात यहाँ पे बोल रहे हैं कि in a rating agency, the rating agency is removing this black box. There is a group of lenders who want to lend to MSME, but there is no anchor. कि ये कौन है? What is it that they do? So the job that they are playing is actually to remove this opaqueness. ये जो किसी को समझ में नहीं आ रहा है कि who is this borrower? That is the essential aspect of the MSME rating. Now, what for the credit rating, I wanted to also say is that we are kind of forgetting that this borrower is in an ecosystem.
Okay.
Capital markets to aage hai. Here you are just talking about party to party exchange of funds. In this itself also, there is so much of benefit that the MSME gets in terms of here you have an expert. This is an unbiased, independent expert. So if in the traditional system where you have to go to each banker and the banker might have a bias against you, so now there is an understanding of who is a good candidate for a loan. So now that is being converted into something quantifiable. अब चाहे वो गुप्ता सर दे रहे हैं या खान दे रही है, who's giving the loan doesn't matter. There is now a very unbiased and an expert, and that's an opinion. So I think the first thing we have to understand is that it removes that kind of helplessness that a borrower might feel while approaching a lender. That's the first thing. और इसमें होता क्या है कि जैसे सर ने explain किया है कि you are having the ability of this organization to pay back this loan. So there is a principal repayment and interest repayment. So now you are looking at their cash flows. How is this system set up? So who are their customers? Who are their vendors? What is the working capital cycle? Then you are looking at in contrast to the peers. So इनका market share क्या है? Where is this industry going? Economy kahan ja rahi hai? So when you go for a credit rating, that report is going to give you a very strong analysis of where you are, where you're going to go, where is this industry headed? What are these factors in the economy that might cause you trouble? So like sir was saying, it's not, like Chaudhary sir was saying, it's not a view of today, it's also a view of the future. So I think all these aspects we have to keep in mind that oftentimes our MSMEs are not visible. So it also gives you a visibility. So if it's, let's say some third party wants to invest, they can approach the credit rating agency and buy the reports at a very nominal fee. And if it's an MSME with a website, you can put up the report there. So it creates visibility. It, like sir was saying, it's removing this problem of unreliable data. Maybe data is not timely. And again, like even sir was saying that there are so many solutions now. You have fintech coming in. You can use these fintech applications for accounting packages. I'll give you one of my own examples, sir, because I've been teaching MBA students. I think in 2018, I had sent 4 students to an MSME entrepreneur, and they were told to just do the accounting aspects for the last, I think, 2 or 3 years. They got so frustrated. It was very, very difficult to actually even record the bills, and there's so much of incomplete information. So I think we have to understand that the credit rating agency is doing this one job of making this market a little more efficient. It is removing this black hole of who is this, and is this business reliable? Then I think one thing we are also forgetting is that it's not the MSME. Then there are peers, and oftentimes I feel in India हम लोग competition को negative सोचते हैं. But competition enables you to compete in a better way with your peers, right? So you also can have an idea as to what your peer is doing, because this is now information, at least in the theoretical aspect. It's in the public domain now, and anybody can read up and see the strength or the weaknesses of this particular business. And I think one more thing that comes in is that even SEBI, when they are having some policy, norms being set, for example, for mutual funds, तो उसमें आता है कि ये grade so and so instruments तक you can invest. So these credit rating agencies are actually giving some kind of an idea as to what is this instrument, how reliable is this instrument. So therefore, credit rating agencies are not just rating, like there was this conversation that, can the business get a rating? So you are actually rating also the instrument, this loan, the ability of this loan to be paid. It's not really about this entity. And I think we forget that it's not just, so the instrument can be, as you already said, can be a debt instrument. It's not mandatory for IPOs, but IPOs can also get credit rating. NBFC fixed deposits get credit rating. Governments get credit rating. Ab India ko Moody's ne Baa3 ka credit rating diya hai in September itself. So what is this credit rating? It is a view. It is an opinion. Okay, theek hai, there is uncertainty ahead, but based on the data until now, this is the best bet that we can take, that this is a stable business, and whatever you have invested in, as per the promises, you're going to get back the return. So one more thing I wanted to add was, we're also missing the point that bigger markets. So if we come to capital markets, ऐसा नहीं है कि मतलब अगर आप investment grade ही हो, then only you have investors. There are investors who also invest in low grade bonds. But that's a risky strategy, sahi hai. Magar it's not like market mein everybody is one kind of investor, one kind of a issuer. It's a whole universe of different kinds of, view of the market. Somebody is expecting that IT will now not be stable. Like today, there was some conversation, expect only 10% return from IT. Bahut zyada expectation ho gaya hai. Then whether technology will take off, pharma. So there are different players in the market. Even low grade gets invested. Now, why you get investment in that? Because obviously, agar the company is, so I'm not talking about MSME. If there is a, like a regular corporate that is struggling to get money, and if it's in low grade, it has to pay high interest. So the investor gets a higher return. Then we also feel that maybe acquisition hoga, merger hoga, kuch to a solution niklega, jo ye company jo doob rahi hai, rescue ho jayegi. So there are reasons why people do invest in these kinds of instruments also. Then I feel that at the end of the day, yes, we do feel that credit rating agencies are probably not doing their job. But then at the end of the day, I think MSMEs, what they can take from the credit rating experience is that, बस यही चीजें पकड़िए आप, your cash flow, your system, market में आपकी position क्या है, where is your industry going, and where is the economy moving. I think अगर MSMEs have survived COVID and COVID का stress, I think it's time that they seriously look at scaling up. तो बात क्या आती है कि see, there is so much of effort by the government, there's effort by the banks, and we do see that the data tells us कि barely 11% come for funds. अब ये बुरी बात नहीं, अच्छी बात है. That means you are doing your self-financing. There's nothing wrong if you want to stay in the same place. But if you want to expand and get bigger and stronger, then you have to look realistically as debt, as loans being a way to scale up. That would be my view, sir.
Thank you very much, madam. You are taking a research for the alternative investment and sustainable finance. Only few words. Have any view on that? What is alternative finance? What is you are talking alternative investment and sustainable finance?
Sure, sir. So there are two different things actually, but both connect in the way that now the investor is not one investor who wants to give money or doesn't have current use of money and hands over the money. So this investor can be an individual, this investor can be a company, this investor can be a fund, this investor can be a government investing in businesses in different countries. So we have something called sovereign wealth funds also. So now you have a risk-averse investor and you have a risk-taking investor. So when we talk about alternative investments, we are talking about hedge funds, we're talking about venture capital, we're talking about PE funds, we're talking about wealth managers creating risky instruments for HNI. So for example, we had structured finance. So ये अलग बात है कि it may have some kind of fraud, this or that. But the point here is that you are actually pooling. So like for example, we have asset-backed financing also. So अगर airport बनना है, so you won't have all the funds upfront. So you only pay them once the airport is ready. Or in India now we have REITs. We have INVIT. So आपको अगर infrastructure में participate करना है, real estate में participate करना, you won't buy a land. You can invest in any of these instruments. So that is all alternative, which are low market. They're very risky. They're not for the average investor. They're for the risk takers. Those who have already got their life in place. They don't depend upon the investment, and they have the ability to bounce back from a paper loss. So ये भी होता है ना, we react to the market. So once you have decided that this investment is to stay for 5 years, whether the market goes up or down, you should not be reacting, because that cycle will be there. So coming to the sustainable finance, आजकल के investors पूछ रहे हैं कि if I've given you so much money, where did you invest? So there is now, like sir was saying that, and I didn't know this. So Equity is giving this ESG rating now, and that's become very popular now. We want to hold companies accountable. कि आप मतलब कितना environment को spoil कर रहे हैं, क्या आप diversity के साथ business चला रहे हैं, are you giving fair labor, are your employees at risk, like the workers, are they having good working conditions? So we are looking at this, other than profits, we're looking at the planet, we're looking at people also. So this is sustainable finance, where even in big projects in Africa, so when they're coming in through debt or they're coming in through equity, investors are asking कि ये पैसा आपने कहाँ लगाया और इससे अच्छा क्या किया है. So that is sustainable finance.
Very nice, madam. So I'm coming to Sri Suman sir. There is a question from the Sasik. So he is writing to you that please explain the reason why RP rating are not shared with the company, unlike other bank rating, where rating is even published and shared. Have any view, Mr. Suman Chaudhary?
हाँ गुप्ता जी, ये देखिए, I think the question is on RP मतलब resolution plan ratings.
Yes, you are right.
This is a new scheme from the Reserve Bank of India, which came in 2018-19.
Okay.
And after pandemic also, the restructuring scheme was there. One was before COVID and during COVID also.
Okay.
Now, ये जो है, Reserve Bank is very clear on the regulations here.
Okay.
It says that the agreement of the rating agency is with the bank only. A bank can only give a mandate for this RP rating. So the agreement ऐसे ही drafted है कि the report has to be shared with the banker.
Okay.
Because the bank is paying the fees actually.
Oh,
The
nice.
agreement is signed by the bank. So it's a requirement as per law that we have to share the report with the banker. And since this is not a private rating, we cannot put it up in our website. As we do for other ratings, we give a rating rationale. Here we cannot do that also. That's not permitted.
Very nice, very nice. I think people are appreciating the efforts. Only they're asking that time is very short. You should extend, although I am extending the time half an hour.
Yes.
Still, people are feeling like that. Uniform data entry model to be brought in the banking system that help to analyze the purpose, transacting person, nature of transaction. Because we are not able to analyze banking statement properly, even our software, thus the proper correct interpretation is not possible. The only suggestion for that, I think there is no question where I can ask all power strategy to properly test it effectiveness. Dr. Khan, Madam Khan के लिए question है, SME owner don't care for rating agencies. They run their business with their own funds. Solution is. Madam, you can have view on that question. Madam Khan.
Yes, sir. Yes, sir. So like I was saying earlier, it's actually it's when we talk about funding also, if you're bootstrapping, आप अपने आप से आपका business चला रहे हो, that's actually one of the best models. So nobody is saying that because यहाँ पर loan है आप जाके loan लीजिए. The point being discussed here is that if there is a very uncertain world. So I wanted to actually bring in these points also, and please correct me if I'm wrong, because I'm not in the MSME sector. So I'm sorry if I'm making a wrong analysis. But what I can also see is that first there is a dominance of informal sources of funding. or self-funding. So those are reasons to be looked at. I can see here, the suggestion here is that what if we don't have to pay tax? So that I'm a student of economics, I'm never going to support something like, avoidance of tax. So that can be an issue that I guess, the learned people can discuss. But I wanted to say is that maybe I'm wrong, but I feel that MSME has allowed itself to be locked to the government's perspective. So although the government has done a lot, I've seen that CPSCs, whatever requirements they have, about 28% comes from MSME. So they have the Sambandh portal and they'll tell you what all other requirements that, whatever other inputs that they need from MSME. Then there is a Sampark digital platform. So even those who are trained can then be employed in the MSME. But I believe that now that we have younger people, see, the evidence is very clear. We have a lot of youngsters who want to launch a startup. अब एक तरफ इंडिया में एक पागलपन हो गया है कि मुझे एंटरप्रेन्योर बनना है, स्टार्टअप शुरू करना है, and then we have a group of people who are stressed. So there is a disconnect between the two parties is what I can see. So I feel that a little more of visibility using modern tools of business development, simple things like coming on, just having your own website, coming on to LinkedIn, making those 10 calls, so making yourself visible. I'll give you another example. I have a student, his father had a plastics business. So when he did a job, then he came back to, run his father's business. He has moved to sustainable and, plastic, and he has, he has decreased that business and he's doing recycling. So what I'm saying is that MSMEs have to now slightly break away and also look at the startup system has got different kinds of customers, different kind of vendors. Maybe that model also can be looked upon. So one thing I was seeing is that there are, fintech like Credible and Canopy. They are giving you supply lines. So as an MSME, you need not be locked to the government, because see, if you're only interfacing with such a powerful entity, your pricing ability is low. So you have to also diversify as to what are these other alternative businesses that I can link to. So I think that is something that MSMEs need to look at, that it's a very different world from where it started from. One last thing I would like to say, sir, if as an MSME, senior person with an MSME business, if you have taken a loan, struggled so hard to pay like 10 lakhs for your child's MBA education, I think uski bajaye aap loan leke business mein daliye. Because the point is that spirit has to be passed on. I feel that salaried children want to start startups, and MSMEs, that those children, because we have students coming to the MBA classrooms, those children want to go and do a salaried job. So I think this risk-taking MSMEs already have it, and they're doing such a good job. But there has to be a aggression to also grow. So I feel that this kind of platform that AFAI has got, even Resurgent India, talking about these issues, I think entrepreneurship in India sadly is a lonely journey. The entrepreneur doesn't talk to family, the children don't know. But I think we should share, because these are the lessons that cannot be taught in a classroom or cannot be taught in a webinar. So I think we should get entrepreneurs to speak about their experiences. Thank you, sir.
Thank you very much, madam. Although sorry that certain time, because I am in Rajasthan, so my internet was not working, so I cannot put full attention to Mr. Suman Chaudhary. Suman Chaudhary is excellent for the rating, and he clarified all the doubts. So thank you, Chaudhary sir.
Thank you.
You are very free, frank, and given the, I think, insight of the rating agencies to our listeners. Thank you very much, sir. So I am thankful to Dr. Rajat Kala, who has explained very clearly the SME sector. What are the challenges and what are the rating agency expecting from them? So he also suggesting that rating a corporate parameter and the SME parameter should have a different views so that it can be benefited. I think that is the crux of the things which Mr. Kala had come out very clearly, that so for SME sector, the rating agency should think in other way so that it can be beneficial, because the SME sector is playing very vital role. Either you talk about the GDP, either you talk about the employment, or you talk about the export. I think this sector requires a somewhat sympathetic consideration for the SME sector. So I'm thankful to Dr. Khan, who is a very learned and researcher. And he come out very clearly, capital and alternative funding And these things, what is sustainability finance? I think this is a new concept. She is doing a remarkable job under her field and giving her views very clearly. For I think some the participant also appreciated and raised some questions from her. Above all, I'm thankful to my respected Shri Ajay Vyas, former Executive Director, UCO Bank. So his view, I have nothing to say. So he's very straightforward, very clear, very straightway thinking. And when we are asking about the rating as a responsibility, he is very, very clear that the banker who is assessing and giving the finance should take care of that also. I think instead of a rating agencies. So, and Mr. Suman Chaudhary also explained the rating agencies should also be somewhat, should be, you can say properly, they should look into the things so that the finance of the banking sector should not go into a default or somewhere. I think rating agency is playing very important role for the development of the economy. And if they are playing proper role for the SME sector, I think the economy can be different. And what the vision of our Honorable Prime Minister of 5 trillion economy that can be achieved, I think for which rating agency can play very, very, very important role for that, in my opinion, for that. So lastly, I'm thankful to my team, Mr. Rohan, Mr. Surinder, Lokesh, and Devas, who is behind the scene. Although somewhat problem was facing by me for the internet connection or something like that, like they have also helped to solve it. So I'm thankful to them also. So my point is for All India Association for Financial Advisor of India is constituted. The main object to share the knowledge. And we are also having the 400 members at present. So we are feeling it. So if you are the financial advisor or the financial institution can associate as a member with the our association, that give us a strength to bargain with the government so that it can be recognized by the IBA, by the government of India. That is our expectation for that. Above all, my research in India, you know that. So we are a growing investment banker, we are a merchant banker, we are providing a DPR, draft project report we are also providing, and we are conducting technical economy viability study. Besides such webinar, which we have hold it is under the Research in India banner, 131 webinar we hold it, and under the associations, we hold more than 26 webinars. So this is our strength of that. So I'm thankful again to the eminent speakers who are very learned. I think lastly, I'm thankful to my participants who always oblige us. They always giving a huge, you can say, feedback to us and giving a proper appreciations and also criticizing also. They are also suggesting some subject also, topic also to us so that the next webinar, what we can do it. So that is with their participations. So we are thankful to them, active participation. So lastly, I close the session with the thanks to our eminent speaker, to my team, and to the participants. Thank you very much, sir. Thank you very much.
Thank you, sir.
Thank you. Thanks to all.
Thank you, Gupta ji. Thank you,
sir.
Mr. Gupta.
Thank you, sir. Thank you. आपका तो
Thank you, Dr.
आशीर्वाद ही
Khan.
बहुत है सर हमें.
Thank you, Chaudhary
आपने
ji,
bless us.
for joining.
Thank you very much, sir. Thank you very much. Okay, madam. Thank you.
Thank you so much, sir. And
Thank
all
you.
the very best to you. And we would love to hear from the MSME entrepreneurs themselves. That would be great. Thank you, sir.
Yeah, I will sending you the feedback to you. I am sending a recording to you.
About their problems, I think they should speak about their experience and problems. That would be great. Thank you.
That is not possible in this platform because timing is very short. Because half an hour we have already extended. If you go on talking to these people, then we require a not virtual program. That should be physical program. Now we are starting with a physical program. I am holding one webinar with the Bank of Maharashtra on 28th. That will be about 500, 600 participants will be there for SME sector. That we can open with heart. We can talk to these people.
Awesome.
What are the difficulty? One side bank, one side is research in India. So
Awesome.
that will be there. That is not possible under a virtual webinar, madam.
Excellent.
Otherwise, it will take 3 or 4 hours.
As long as you're taking the word, that's precious. There is
Okay, that is important. If they have a question, they can send to me. We can reply it. Send to Research in India, send to these associations. So I can forward to our webinar speakers also for that. Thank you, madam. Thank you very much. Thank you very much.
Thank you.
Thank you.